So Janet Yellen and her colleagues are front and center stage for all the traders here and around the world. They are huddled behind closed doors in Washington debating whether the economy is ready for liftoff. The first rate hike in 9+ years. The suspense will come to an end in less than 24 hours, 2 p.m. Eastern. But right now, we bring in Sean Matthews in a Fox Business exclusive. He's the CEO of the main brokerage unit of Cantor Fitzgerald. Sean, you've got a huge trading floor.
Hi, Liz, how are you?
Great. And all of your traders, I know, have been chattering and betting. What are they betting for tomorrow and what the rate will be? Will it be higher, lower, stand pat?
Well, the market is actually calling for about a 30% chance that they do tighten. We actually think that they are going to tighten. If you look at all the rhetoric that's coming out of the governors, they do want to tighten. They're trying to figure out any way they can. They probably missed the window when they should have tightened 9 months ago. But I think they're going to want to maintain their credibility, and they're going to tighten tomorrow.
I got to tell you, I've been talking to traders around here. I've gotten everything from stand pat, but the more that I talk to some of these guys, they are telling me there could even be a possibility of maybe a tiny one, a 10 to 15 basis point. Everybody assumes it's going to be a quarter of a point. They're saying maybe even just 10 to 15 basis points.
I'm not believing that.
You don't believe that? You don't believe that?
Look, I think they have said all along it's 0 to 25 basis points. That's what they've talked about for rates. That's their target. So if they actually say 25 basis points, they're going to make the argument that they're not really tightening. They're just going to the higher end of the range. Mm-hmm. And if that's the case, then they're going to come out with dovish comments after that and say, it's all going to be data dependent from there going forward. So really, they're going to go to the high end of the range that they've already had in place for years. And then they're going to be dovish and talk about, when the next time will come. It's really going to be data dependent.
Okay, data dependent. But if that were the case, here's the data. We have, a much more solid housing market, but we have no inflation. Is there one piece that you and your traders look at where you say, okay, the jobs numbers look good, the unemployment rate, the first time jobless claims look healthier, but inflation doesn't?
Look, I think they are going to look at very closely the jobs numbers. And when looking at jobs, you're close to full employment at 5% or 5.1% right now. So they're going to look at that, and they don't want to get behind the curve. And the fear is once you get behind the curve, you've lost your credibility. So I think they want to do something right now. They've all come out and talked about that. The question is, how are they going to do it, and what are going to be the comments? The key are the comments afterwards. So if they go again from 0 to 25, they say 25, and then make dovish comments, I think it actually calms the market in some ways because you've actually gotten the first one out of the way.
I agree. But Sean, is there any way, how are you and your trading floor preparing for what might happen tomorrow? You are at Cantor Fitzgerald, one of the few that's actually authorized to transact business with the New York Federal Reserve Bank.
Absolutely. And actually, right now it's pretty quiet. The equity markets are doing well. Fixed income, everyone is sitting and waiting to see what happens. I think we are going to be looking for, again, the comments that are coming right afterwards. We position ourselves towards them tightening, but certainly we're being pretty conservative right now.
Great to see you, Sean. I know it's going to be a little crazy tomorrow, but we appreciate you coming on today. Thank you very much. Sean Matthews over at Cantor Fitzgerald.